Inflation is heating up, and this time, the data is impossible to ignore. From food to transportation, prices are climbing again, and the Fed is watching closely. In today's breakdown, I'll show you the latest numbers, why inflation is reaccelerating, and 3 strategic moves to protect your portfolio. In June 2025, the Fed's preferred inflation gauge, the Core PCE Price Index, jumped 0.3% month over month, its biggest rise in 4 months. Year over year, it's now at 2.8% above expectations. Headline CPI tells a similar story. Annual inflation climbed to 2.7%, the highest since February, up from 2.4% in May. Monthly CPI saw its biggest increase in 5 months, also up 0.3%. Digging deeper, food prices rose 3%, transportation services surged 3.4%, and used cars jumped from 1.8% to 2.8%. Even energy costs, while still lower year over year, aren't falling as fast. Gasoline is down 8.3% instead of 12%, and natural gas remains sharply higher at over 14%. Shelter inflation cooled slightly to 3.8%, and new vehicle prices barely moved, up just 0.2%. But the takeaway is clear. Multiple categories are reheating. This data puts the Federal Reserve in a tough spot. Cutting rates too quickly could unleash more inflation, while keeping rates high risks slowing growth and pressuring credit markets. For investors, this means volatility ahead. Growth stocks may struggle, bonds remain under pressure, but commodities, real assets, and dividend payers could outperform. 3 moves to consider. 1. Add exposure to inflation-resistant assets like gold, energy, and real estate. 2. Shorten bond durations to reduce interest rate risk. 3. Target companies with strong pricing power. These are not panic moves. They're proactive steps to defend your portfolio in an environment where inflation isn't going away quietly. If you want to stay ahead of the market, hit that like button and subscribe. I cover the numbers the pros are watching, so you're always one step ahead. Inflation is rising again. The question is, are you positioned to win?